Hi, everyone. It's Danielle Marie from the One Realty here in Austin, Texas, with your weekly real estate update. Now, I would be remiss if we did not talk about what just happened this morning. So we saw a reduction in interest rates. So this is on from Mortgage News Daily. This is like the 30-year interest rate. And I will go ahead. I'm going to show this. We're going to add to the stage. So we just dropped down today to 6.45%. If you've been following along, that is the lowest we've been in 11 months. The key date and the key change for all of this, as far as hey, when were interest rates higher than this date on with the 6.45, we're going to have to go all the way back to October. So if we're looking at our 1 year, interest rates dropped down today. If you're just joining, to 6.45%. The next lowest is at 6.25, and actually it's the day before that. So 6.26 that happened last year on 3 October. So this is, I say, really good news for buyers out there. I have to talk about it. Interest rates change. Now, one thing that is coming up is we're saying, like, what is going to happen with the Fed interest? Like, what is going to happen in September? And I believe, and I want to say it was September 17th. I want to make sure. So September 17th is when we're going to hear, hey, is the Fed going to cut rates? Let me tell you historically what happens when it comes to interest rates. So even if the Fed cuts rates, typically we've seen that cut already built into the decrease in interest rates. So I want to prepare everyone, just because the Fed says they're going to cut rates or something happens, on the 17th, does not necessarily mean that mortgage rates will go down. Typically, it happens right before it, and sometimes it shoots up. So I want to give you that data. Now, the other part of data that I want to give before we dive into Austin is it's very important to understand what are our leading indicators, what are lagging indicators. So leading, normally pendings. Lagging is kind of sales because they've already happened. The other part that's part of the whole formula is what is happening with mortgage applications. Now this is not Austin specific. This is the entire US. So take it with a grain of salt. I acknowledge that. But what I want to show you right here, if we look at, like, even here's the 5-year and here's where we are. And you can see based on the interest rates and where we are. But what I'll say, if we come down here, our purchase rates, week over week, we're 3.11% fewer applications. Now, but year over year, and this is where the big news is that we're up over 20% on our applications for mortgages year over year. And this is from purchase. Now, refinance, it's also almost at 20%. So I always say, and I just had a client refi down almost 1.2% because we stayed and we watched and we were watching what's happening. And then when they went to a credit union and they got an amazing rate through a credit union. So with that being said, pay attention. If you currently own your home and you bought in the past couple of years, you have high interest rates, pay attention because maybe it's worth refining. So without further ado, though, I am going to hop off and we are going to start talking about the Austin, Texas real estate market. Now, when we go into this, there's 2 caveats. One, last week was Labor Day weekend. Whenever we have a holiday weekend, we typically see a decrease in sales. Also, if you're big into football, and I know it's hard for some Austinites to hear right now, we did have a big game last weekend. Didn't turn out the way we wanted it, but when we have big games like that, we do see a slowing of buyers, not only because buyers aren't looking, but also agents aren't showing sometimes. So it kind of works in both ways. The other thing that we had is the week prior was when Austin ISD, so the Austin school systems, really got back into school. Everyone was back full swing. So these last 2 weeks have kind of calmed down a little bit, but we're going to talk about all that. So without further ado, my name is Danielle Fountain. I am the founder of the One Realty here in Austin, Texas, where we take a data-driven, all-in-one approach to real estate. And you'll see my data-driven is because we are going to hop right in here. We are going to talk about my favorite thing. It is numbers. If you're just joining me, go ahead. You can follow. You can save this so that you can find me again in the future. And if you love this information, I'd love if you'd help me out and you could share it to other people. So you can share on the screen. So with that, first and foremost, where are we sitting with our active listings? So we talked about our peak earlier this year. We were around like 3,600 for our peak active inventory. Right now we're sitting at like 34, 32. And I can tell you, I actually was peeking at this just a little bit ago, and even since I pulled these numbers. So I always pull them on Wednesday. So even since Wednesday, our numbers have continued to decline. We are now at like 3429 active listings here in Austin, Texas. So we are seeing our numbers decline. Typically, when we go into Thursday and Friday, you see an increase in listings. In the spring, as we get to the fall, we're just going to continue to see a decrease in the number of listings on the market. That being said, no real change with our average and median houses. We've been sitting around that 1.05, 1.1. So 1.06 million is our average. Our median is just shy of 650,000. We peaked way earlier in the year and we're closer to 7, and now we're back down. That is absolutely normal. Number one, you get a lot of some more of the high-end listings, they pull off because the buyers aren't necessarily there and they go on private markets, as well as you see a lot of homes that are made for multiple individuals or families. You'll see those disappear as well. With that being said, our average days on market and our median days on market, they actually went down. So you can see our average went down by 2, our median went down by 1. This also could be houses either A, going under contract, or B, sellers pulling their houses from the market. With this, and that's where I kind of go to speaking to sellers maybe pulling their houses, because you can see the number of listings that have had a price reduction, 112 of them disappeared from our active inventory. So we dropped down by 1.4%. So we are having the number of listings with price reductions. We hit like 60% is extremely high. Regardless of the time of the year, we hit our price reductions were going up weekly, way sooner than normal. Normally we're seeing the spike start now. Well, this spike, the houses with price reductions started early, but I think that's also because sellers knew that they needed to sell their homes. And so they were cutting their prices earlier. So we're seeing that. The number of new listings, you can see we peaked up, went up a little bit higher, 237. I would also say this also goes back to, it was the holiday weekend last weekend. So maybe you didn't have people list last weekend that are now listing this week. And then 54 of those had been previously listed. I always tell you, if you are selling and your house does not sell, depending on the time of the year, it might be worth it to maybe wait 90 days. When you wait 90 days, your days on market reset. And so even if you're going from one agent to another, like let's say your contract ends and expires, and then you're going back with another agent, depending on how long you wait is whether or not they'll show up a cumulative days on market. Those called CDOM is what you'll see sometimes, and that will stay high. So sometimes it's good to allow those 90 days to reset that calculator, as well as when someone's looking at it, they don't see that the house has been sitting for a long time. Now, a smart agent and a smart buyer, we're going to look to see the past listings, because I want to see, has it expired? Have they tried to sell the house for how long? What kind of hurry is the seller in? If you are a buyer, on the opposite side, when you're a seller, you kind of want to hide that a little bit. So with that too, our average price of these new listings, you can see that they are lower than our average and median price overall of the listings, of active listings. But for the new ones, we're at just sitting a little bit over 1 million, and our median price is down to 600,000. Couple things. One, it could be that people that are listing really need to get their houses sold, so they're listing at a lower offer price. The other thing could be just the size of the houses, the quality houses that are being listed. Okay. The other thing that we need to pay attention to is what is happening with the market as far as, yes, we're getting houses taken off the market. Are we seeing a rapid increase? Because when we see these numbers shoot up, especially houses that are on hold, they're withdrawn, expired, all of that, that gives us an indication that maybe sellers are like, hey, look, it's great. I didn't sell my house. I'm going to take it off the market and I'm going to wait. And if we don't see this might mean that, hey, sellers are just waiting. They're just kind of getting desperate. They're waiting for it to sell. So you can see it was at 262. The biggest one was expired listings went down. We had significantly more, or went up, I mean. We had 100 more this week than we did last week. I can also say that the holiday weekend, people waited. After the holiday weekend, people took their houses off the market. So, okay. Here is what I call my leading indicators. If you were looking at sales data, you were already too late. So one, we looked at, are we seeing an increase in mortgage applications? 2, we're going to look at, are we seeing an increase in pendings? And what does the pendings look like? Because this helps you to get an idea of what are the buyers that are out there versus just kind of a general, hey, these are the houses for sale, or these are the houses that sold. Because typically at that point, you're about 30 to 45 days late to look at the data of what is happening in the market. That being said, we did see a drop off in the total number of pending listings. So we dropped down to 830. This is the lowest that we've been for a long time. So if we go back and if you're following me now, I take a data-driven approach, and I really like to look at the data over the course of the time. I really like to see, hey, what is happening over the course of the year? So I've kind of been tracking this data, and I want to go the opposite way so that you can see this. Let me pull this up right here. Because we want you to see how far. So if I'm looking all the way back, this is from August. So this is for this week, the 3rd. So it's 3rd of September. So I do Wednesday's numbers all the way back to 27 August. And I'm doing week over week. So if we're just kind of clicking over here and we're looking for 830, we're looking for something lower than 830. And you're going to see that we have to go significantly far back. And the last time we had pendings under 830 was in February. So 5 February. So we are kind of, I say, selling out to where they were. And if we look at February, you're going to also see the closed listings was kind of abysmal right here at 426 in the past 30 days. We're significantly higher than that when we go our 30-day mark. Now, I can see our pending listings are probably going to start dropping off our total numbers because our sales are going to start dropping off because our pending numbers are dropping off as well. So we'll come right back to this data. Here you see that 830, sorry, I don't know why I said 830 pending. The other thing that you are going to see right here, and I'll make the screen so you can see it bigger, is that we are going to see, hold on, let me do this real quick. So 830, I'm seeing 830, our new weekly pending, we're down by 15. Last week was a pretty bad week at 161 for the new weekly pendings. And that's me tracking here. So if you'll see here, I've been tracking since September of last year. So we're almost at a year's worth of data. And when I say tracking, I've been watching it, but I started like actually logging it and capturing it real time. Because even if I look at pending data, the other part that you're not seeing is when houses drop off, meaning they go out of contract, someone can't qualify, different things like that. It's going to change these numbers. I'm seeing these numbers real time before people back out of contracts that we're seeing. So you can see right here, we're at 146. And this is, we've been dropping off significantly since we kind of hit that peak in August and July. We kind of came back to life a little bit. And that has to do with interest rates kind of went down a little bit. Now, with interest rates going further down, the question is, are we going to see an increase in buyers come back to the market? So this weekend will be very, very, very interesting. Is this decrease enough to get people back? For VA borrowers, you're probably going to be in the 5s. If you've got a good credit score and kind of where you are, because right now the VA is at like a 6.05. So something to pay attention to for the market. So we'll see where we are next week to see if it had any impact. But with that being said, our average price, and this is why this is important, this is the leading indicator. So our average price is 810, our median is 600. We're seeing these as leading indicators because when we pop down here to our sales prices, you're seeing 831 and you're seeing 650. This means that these numbers are more than likely going to go down significantly. And that's just because of, hey, here's what's pending. Now, it doesn't necessarily mean, well, it does. It kind of, we've had a lot of price reductions, which you can see right here. Out of the number that is pending, 536 of them have had a price reduction. So over 60% of them that are pending had a price reduction. 60.3 have had a price reduction. So actually, I was looking at last week's number. So you can see that we fell even more. So last week was 810 and 600. This week, we're at 796 and 599. We are going to continue to see price drops because there are sellers out there that need to sell. And here is your days on market here as we're at 69 and 52. And you can kind of see if we compare it to what's actively on the market. The average house has been on for over 3 months. The median house has been for like 2.5 months. This is really interesting that these two numbers have start to get very, very close. That means there's a lot of houses kind of sitting there on the market. Now, with that, we are going to look at what has closed in the past 30 days. So if you're just joining me, my name is Danielle Fountain. I'm the founder of the One Realty, where we take a data-driven, all-in-one approach to real estate. So whether it's you're buying or selling, so whether it's you're buying, we are going into the macro and micro analysis of the houses and of the areas to set you up. And if you are selling, we are also looking at the market to time it correctly, as well as to bring you the best valuation for your house based on what your goals are for selling. That being said, looking at what is closed. So in the past 30 days, 728 homes have closed. We're going to continue to probably see that trickle down. Remember, we saw that 500 when we were looking February. It's going to stay higher, but I think we'll probably end up getting closer to like the 600s by the end of the month, unless our pendings go up. That being said, you can see our average sales price and median sales price. Even though these two went down this week, you can see they actually went up a little bit. So it also depends on, does the right house hit the market and you want it right away? Are you making an offer right away? You're gonna see an increase there. Here is our days on market, our median days on market. I don't really worry about this for the sales data, and here's why. This number doesn't really matter. It's these numbers. This is showing me what's about to happen. When all of these close out, this is gonna happen. So what I'm gonna just say is our average days on market and our median days on market are still gonna go up for our sales data in the coming weeks. Not surprised by this at all. Now, this is the part, if you are a buyer, you want to pay attention to. Now, this is macro Austin. So this is all the single family homes in Austin. I'm not talking about Austin as a metro, because I'm not including Buda, Kyle, Pflugerville. I'm not including if we go all the way out to Spicewood, if we're doing Bee Cave, Dripping Springs. I'm not including those, even though that's in the Austin metro. Those cities are so different depending on where you are. Some houses you're having the average house be around $1 million. Other ones you're having the average house be around 300. So it just depends on what city you're in. With that being said, we're just looking at the close for the city of Austin. The big part of this is, what are people selling? Are sellers motivated to sell? What is happening? Well, this shows you their motivation right here. See, all this is red. That means that sellers have started to accept less than what they originally listed for. So you're going to see close price to list price. Close price is the current price of the house, or was the final sales price of the house, to list price, which was the very last price it was listed at. Then you're going to see close price to original list price. Original list price is what was it listed at when it first came to market. You're going to see a couple things. So the close price to list price, the average and the median, you can see they're right around 96 to 97%. Not much change week over week. However, where we did see the change is the close price to original list price. And you can see the average is a little over 91.5. The median is at 93%. Now, I'm going to say we're probably going to continue to see these numbers go down. And we're probably going to continue to see the close price to original list price drop. And that goes back to this right here, price reductions. Sellers are having price reductions. So if they're having price reductions, this is going to go down as well. It just depends on how big their price reductions are. So my takeaway over here, so if you're just joining me now and you haven't seen all the data, you can go back, you can listen to it. Number one, we're seeing a decrease in the number of active listings. That is completely normal for this time of year. However, what I will give the caveat is we still have way more listings on the market than we have in prior years for this time of year. Normally, we're still adding listings. Right now, we're taking, it kind of stopped about a week ago or so between historically, like what happens. Normally, we kind of stop right at the end of August, September, and then we start going declining. Our decline started a little bit earlier in July, but we had so much inventory. So we're seeing that drop down. The next thing is we are seeing an increase in the number of houses that are coming off the market, meaning sellers are okay with not selling and they're waiting to put it on, or they're renting their houses out. We're also seeing a decrease in the number of pendings. Same with prices here. So all of that to say is, yes, the Austin market is softening. Now, I would be remiss not to give you like year over year data, because all of this is week over week data. So I am about to talk about where we ended up. So we've talked about this past week, we've talked about the prior weeks. Where did we end up in August? Now, it's still preliminary. We're gonna see more houses hit the market. So with that, I'm about to go through where we ended up in August for the Austin real estate market as far as the number of sales for single family homes. I'm going to give you a kind of a glimpse into September. Not that September's numbers there's such a small number. It's not going to be valid for the remainder of the month, but at least you can kind of see where we were last year and where we are historically. So without further ado, I'm going to hop and I'm going to show you. Here is where we are for Austin for September. Well, let me skip out of September first. We'll talk about that afterwards. We're going to go into August, and we are going to talk Austin real estate numbers in August. If you join me every week, I'm going to keep updating these numbers because typically, like when I updated these numbers, I still added like 3 more sales to July, even though we were in September. It's just when agents close out sales or when the builders close out sales and it takes them a while to update the MLS, that's finally when we get the data. So you are getting this first. The Austin Board of Realtors hasn't even released this data. They wait for probably another 2 to 3 weeks. I'm just giving you preliminary data. So first off, for August, we closed 727 houses thus far. So you can see we had a better year than August of last year. So this right here, this is the difference year over year. Right here is the difference month over month. So this is comparing August 25 month over month to what was down below for July. Then I also include historically because I want to see where were we as far as historical sales. So you can see right here, this is our average median highs and lows of the number of units that we typically sell in the month of August. If you look up here right now versus the average, we undersold by 410 houses, meaning 410 fewer houses than a 20-year average. Think about this. I was going back to all the way to 2005, and we're 410 less. So if you look, like this was crazy. In 2006, we sold 1,700 homes. I mean, that's insane. The lowest we ever sold was in 2010, which was 648 homes. Now we are sitting at 727. We beat the low. We beat the month over or year over year. So we beat last year at 702 by 25 homes. So 3.56% increase, which if you look at the historical average or what we just talked about as far as the number of people applying for mortgage applications and it's going up, it's 20% week over week or 20% year over year. This kind of makes sense that we're going to see more buyers coming to the market. The other thing is I've said this, you can go back and watch my videos from a few weeks ago. I said that I bet we'll end up right around like the 750 mark. That's kind of where I thought based on the number of pendings that we've had. So with that being said, where do we stand price point? Well, year over year, we're up by 1% at 0.95. And our median is up by 5.69%. So we're at 650. Now, if you remember, if you followed me, or you can go back and watch the video when we talked about our weekly data, we were looking at closer to like 600 for what is currently pending. It's actually below it, it's at 599. So I expect that our month over month is going to be a little bit lower when we start getting to September's data. If we go back and we look at our month over month, so we're comparing where we were in August to where we were in July, you can see we actually increased. We actually had a stronger sales in July, like as far as when I say sales, houses going pending in July that would close out in August than we did in June closing out in July. And that was just interest rates went down and we saw people move. So that means interest rates matter. So with interest rates dropping today down to the lowest in 11 months to the 6.45, that there's something to be said about that. So it'll be really interesting to see, was that enough to kind of push people a little bit into buying? So you can kind of see that right now. And now if we look at where are we from December, because people always say, hey, has the Austin real estate market bottomed out? There's some people that said, yes, it has. There's people that said, no, it hasn't. So if we look at our average sales price since December, so where we closed in December, we're up 1.19%. nothing really that high. Our median sales price is up like 6.5%. So it's going to depend on how you look at Austin's market. If you're looking at Austin's market from an average, there is, I think, a high probability that our average will be negative this year. I think our median is going to stay above. I think our median is going to stay slightly above where we were. So our year-to-date median or our year-over-year median, when we look at December of the end of this year to December of last year, I think we're going to be up a little bit. So it's going to kind of be a, hey, Austin maybe has bottomed out, and that's just kind of showing you this data right here. The other thing that we're going to see is days on market. So right here, days on market, you can see year over year, we've had more days on market. Completely expected that. We're also month over month, we are significantly higher with our days on market. And then this is the very interesting thing, is that our days on market compared to December, our average is only, and this is for August, so it's going to get worse in September. Our August, we're only 10 days difference from average from where we were in December, and only 5 for our median. That says a huge, huge amount that we're that close to where we were for December data. Now, that's showing some softening, that's showing that houses are sitting longer. The big thing is, are sellers willing to sell, and are they taking a discount from their perceived list price? So if we go close to list price right here, this shows you our softening of the market. How soft are we in comparison? Close price to list price is what it's last listed at and what it's closing at. And then close price to original list price. What was it first listing at? And you can see year over year, we're down, meaning sellers are taking more of a hit on their original listing price. Now, does not mean that their original listing price wasn't higher than last year's, because that could be the case. So in 2024, the average list price might have been that difference of that 1 or 2% lower, so that when we lower our prices this year, we're still getting even to last year. So I say take that with a grain of salt, but this is showing you that sellers are willing to make a deal. If we go month over month, this is the shocker. So year over year is kind of like, okay. Month over month, you're seeing that we are at 2% under where we were for what happened in July. Meaning we're closing out right now at a 93% of our close to original list price. We were closing out at 95% in July. In August, we're at 93%. If you look at this, is where it's like, hey, shocker. We're not even in November or December. We're way away from it still. We have a whole quarter. And you're seeing right here, if you look right here, in December, we were closing at 94% for our close price to original list price. We are down there. So goes back to also, what was it originally listed at? There maybe have more wiggle room because they listed a little bit higher. But this right here is showing you sellers are taking a bigger percentage now and decreasing the value of their house now, more so even than they did in December for houses that closed out. So that is like that's why when I come back to these numbers right here and I say, where are we going to be year over year? I do think our average price is going to be in the negatives. I think our median is going to be just slightly above. I think we're going to stay slightly above, but I don't think by necessarily much, if that. Okay, so enough of that. I say doom and gloom. That's where we are for September or for August. Let's take a look at September. Remember, September, this is such beginning data. We've got way more data points that were coming. My guess, based on like what we have for currently active inventory, what's been pending, where we are, I think we're going to beat last year's 574 here. I have a feeling that for September, I have a feeling that we'll be in, if interest rates go down, I think that could push us up. But I am going to say that my projection, I bet we're going to be in like the 6s, mid 6s, high 6s is kind of where I see us being. I see mid 6s is kind of based on the data and where we are. So with that being said, you're going to see our average sales price year over year is higher. Our month over month, we're already going down. And you can see that. So our average sales price at $817 and $600 is for September 25. If we go down to September 24, we're at 797 and 620. If we go down 797,000 and 620,000. If we go down to where we are in comparison to December, you're going to see, and this is where I say, hey, I think we're going to be down. You're going to see our average sales price is already below at 1% below. Our median, it's still hanging around that 6.56 above. So that's where I'm like, hey, I think we're going to be down our average for the year, but I think our median will be slightly higher. So kind of offsetting each other. So with that, the other big thing, without diving in and spending lots of time in September, because there's only 55, it's probably like 10%, or actually even less than that, of the sales that we'll have this month that have been recorded, is seeing this close price to original list price right here. Like this has bottomed out. Like we're below December by 3%. We were at 94%. I would not be surprised if our close to original list price ends up in the 80s by the end of the year. Unless interest rates go down. Unless interest rates go down. So with that, my name is Danielle Fountain. I'm the founder of The One Realty out here in Austin, Texas, where we take a data-driven, all-in-one approach to real estate. If you like what you heard, please, please, please share this out so that other people can find it. It helps my reach. At the same time, if you save it or you subscribe, you'll be able to find me so that you can go back and either watch the full video, or actually, if you just want to DM me or send me a message, you can find me. You go to www.theonerealty.com. You can find me on X at @the_one_realty. I'm also on YouTube. I'm at Austin Real Estate. I don't know how I got that, but I did. So without further ado, I hope you have an amazing Thursday, and I look forward to talking with many of you, which I actually have. So don't feel shy about reaching out. I actually get quite a few of y'all. So have a great day.